Hi, I'm Lindsay Kosnick, Senior Wealth Advisor and Portfolio Manager with Team LWC, and welcome to our weekly market wrap-up. So we started September on a bit of a rough note, but markets have since begun to recover, with investors seizing the opportunity to buy these discounted stocks. And this rebound signals renewed confidence, especially with the potential for upcoming rate cuts. And we did see the Bank of Canada Governor, Tiff Macklem, recently emphasize the need for Canada to remain competitive in global trade, hinting that further rate cuts could be on the horizon, again, depending on how inflation and economic data evolves. So the data continues to do the talking. And in the US, we saw core inflation tick up slightly in August, mainly driven by shelter costs. And this has fueled expectations of a 25 basis point rate cut from the Fed. While some have speculated about the possibility of a larger cut, the 25 basis point reduction remains the more likely scenario. We also saw U.S. producer prices rise more than expected, largely due to service costs, though this isn't expected to lead to any significant shifts in monetary policy. The European Central Bank cut its main policy by 25 basis points, and they also revised down growth projections for the coming years. ECB President Christine Lagarde reinforced the need for a cautious, again, data-driven approach. Meanwhile, in China, there's talks of reducing mortgage rates to stimulate consumer spending as we continue to see the country grappling with a slowdown in economic activity. From a broader perspective, our U.S. analyst points out that while the recent normalization of the yield curve is often a recessionary signal, the market still holds potential for a rally as we head into year end. So, historically, when the S&P 500 rises by 10 to 15% in the first half of the year, as we've witnessed year to date, the second half tends to see additional gains with a median increase of about 10.9%. Of course, this outlook will hinge on how recessionary pressures evolve. On the Canadian front, brace for impact. Air Canada has voiced concerns over possible disruptions if its ongoing contract negotiations with the pilot union stall further. So, should we not see an agreement by mid-September, there may be government intervention to prevent significant disruptions from, you can imagine, travelers and to cargo shipments. So really good luck to all of you with upcoming travel plans. Our fingers are crossed. Economist David Rosenberg, who many of us are familiar with, highlighted the ongoing strain on Canadian households due to rising debt servicing costs, which is no surprise. And so he remains optimistic that continued rate cuts could help ease these pressures. And lastly, we witnessed gold hitting an all-time high. So in times like this, it's really critical to stay focused on your long-term goals rather than reacting to these short-term market fluctuations. And so if you have any questions or would like to learn more about our strategy, feel free to reach out. Otherwise, we'll see you next week.